gentlemen, good day and welcome to the Asahi Songwon Colors Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Mehra from TIL Advisors. Thank you, and over to you, sir.
Thank you, Bhumika. Good morning, ladies and gentlemen. Welcome, everyone, and thank you for joining this Q2 and H1 FY26 earnings conference call of Asahi Songwon Colors Limited. The results and investor updates have already been emailed to you and are also available on the stock exchange. To take us through today's results for the quarter and to take us through the results, we have with us from the management Mr. Gokul Jaikrishna, Joint Managing Director and CEO, Mr. Arjun Jaikrishna, Executive Director, Mr. Mitesh Patel, Executive Director, Mr. Prateek Shah, Chief Financial Officer, and Mr. Saji Joseph, Company Secretary and Compliance Officer. We'll be starting the call with a brief overview of the quarter from Mr. Jaikrishna, which will be followed by the Q&A session. Before we proceed ahead, I would like to remind you all that anything said on this call reflecting any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risk and uncertainty that the company faces. These risks and uncertainties have been entailed in our annual reports. With that said, I'll now hand over the call to Mr. Jaikrishna. Over to you, sir.
Good morning, everyone, and it's a pleasure for me to welcome you to Asahi Songwon Colors numbers for Q2 and H1 26. Overall, our consolidated revenues stood at 271 crores and consolidated EBITDA stood at 23 crores. I'll just run you through the quarterly as well as the H1 comparisons vis-a-vis the previous. Revenues stood at 121 crores, Q-on-Q decrease of 19%, and a year-on-year decrease of 15%. EBITDA stood at 11 crores during the quarter under review, a Q-on-Q decrease of 7% and a year-on-year decrease of 23%. EBITDA margin stood at 9% for the quarter as compared to 8% in Q1 of 26 and 10% in Q2 of 25. Net profit stood at 2 crores, a Q-on-Q decrease of 19% and a year-on-year decrease of 35%. Consolidated financial highlights for the half year ended September 30 are as follows. Revenues stood at 271 crores, a year-on-year decrease of 2%. So we were able to generally for the half year maintain revenues. EBITDA stood at 23 crores during the half year under review, a year-on-year decrease of 20%. EBITDA margin stood at 9%, 8.5% to be precise for H1 FY26 as compared to 10.5% in H1 FY25. Net profit stood at 5 crores, a year-on-year decrease of 35%. General business environment and conditions continue to remain globally very, very challenging. The U.S. tariffs had a significant impact on our blue business, particularly, which does have a significant portion of exports to the U.S. And because our customers in the U.S. were very nervous during this last 3 months and continue to be so even during November. We are really hoping that the tariff situation sorts itself out, and we've already seen early indications from President Trump that he may be probably looking to see an end to the 25% penal tariff at least, and this should be a good reprieve for the entire industry. Generally, as you all know, that the chemical industry as such has been suffering, and notable companies have come up with weak numbers. We are also no exception. Having said that, I would request everyone to, investors and analysts, all to view our numbers not only in comparison to the previous year, where we had a stellar year. We had a 60 crore EBITDA on a consolidated basis last year. That was a significant improvement on FY25 March and FY24 ended and FY23 ended, where our EBITDAs were 22 crores EBITDA for consolidated in 24 March and 11 crores in 23 March. Vis-a-vis that, we did 60 crores in 25 March, and we are doing H1 23 crores and likely to do about close to 50 crores for the full year. So I would request everybody to look at it in light of the overall business environment. Having said that, there is no doubt that the business has been subdued and slow, and we have various challenges. Our team has done significant efforts to mitigate some of the margin challenges which are posed due to decreased demand and volume and increased general overheads by doing debottlenecking exercises and particularly cost-saving exercises from the engineering standpoint. Having said that, I will just would like to mention three notable positive observations. Number one, I'm very happy to report that the ATC Dahej plant, which has been a drain on the consolidated business of Asahi and the balance sheet for 3 years, has now turned the corner and has become clearly cash contributive and positive. We hope to now, over the next 2 quarters, look to turn this into PAT neutral to PAT positive. So this is a good sign. We seem to have turned the corner here finally, despite a very benign business environment for demand, and yet with exports contributing only 19% to overall sales. Second thing I would like to highlight is again about the ATC Dahej plant. Our team is now very well formed. We have beefed up our team with additional strength in the product development area and also in the engineering optimization area. Both of these things now put together make a complete team, and for the whole pigment business as such, the Asahi's blue business and ATC's yellow and red business, I think we find that we are well placed in terms of HR and manpower in terms of meeting the challenges and growing over the next 3 to 5 years. The third significant point is that despite a weak H1 and also the quarter, our cash flows continue to remain exceptionally strong. Both the azo pigment business as well as the API business have seen strong cash flow generation during the quarter. Despite not yet contributing significantly to net profits, both businesses are generating considerable operating cash flow now. During September, this was not the case for the previous half year ended last year. We had almost no cash flow contribution from either of the two sectors. It was very minimal. During September 25, our operating cash flows more than doubled or even tripled compared to the same period previous year, rising from 15 crores to 36 crores. Importantly, while 14 crores of the cash flow of the 36 crores came from the blue business, 19 crores of cash flow came from API and azo segment. So this was heartening to see. And then finally, I would like to name the two challenges. Of course, as a company and as a business, we are hoping to do much better going forward. I think the cycle should be bottoming out sooner than later. The tariffs also should sort itself out soon, and that should again get us back to some sort of normalcy. The two challenges I would like to name is, number one, the Atlas new plant in Chatral. Utilizations remain a challenge. So we have to improve our basic team over there so that we are able to create new markets, enter new products, and utilize the plant better. We have a good plant. The utilization is not up to the mark at all. And this is our big challenge. The second challenge is ATC is now well poised and we need to ramp up over the next 2 years our export business. It has grown from 10% in the previous half year. Compared to that, we have done 19% of exports in this half year, and we hope to, over the next 2 years, take it to 50/50 export and local. With that, I would like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Bhavik Narang from Bastion Research. Please go ahead.
Hi, good morning, and thanks for the opportunity. So the first question I had was on capacity utilization level at our facility. So what's the utilization levels that we have, and what's the peak revenue potential from our existing asset base?
So utilization levels at the blue plant have come down, and that has been a little bit of an issue because of poor demand. The main reason for that has been the U.S. tariffs. The demand, though we export pigments as well as blue crude to the United States, and the CPC blue crude is not subject to tariffs. However, the pigments are, and generally, more than just that, the customer nervousness in the U.S. is significantly high, and they seem to be quite spooked by the unpredictable tariff situation, and that has brought down our utilizations. So basically, we are looking at about 70% utilization in this quarter as compared to 95% earlier. And we are hoping that by January, February, March quarter, we should be back at our normal 85 to 90% utilizations in the blue business.
And what would the peak revenue potential be?
The peak revenue potential would depend a bit on the pricing, but I would say in the band of about 400 to 450 crores would be the peak revenue potential of Asahi Songwon, the blue business.
Okay, and on the Azo business,
I will just talk you through the utilization on the Azos. Here, of course,
okay,
we have seen improvement here. H1 FY25 had a utilization of 45%. We have now achieved a utilization level of about 57% in H1 FY26. So the utilization levels there have improved. Pricing has remained the same, hence the top line has slightly improved because of that, and so as the bottom line, the bleeding has stopped, and we hope that by around 60% utilization, we should be at break-even. So we are nearing that now.
Mm-hmm. And when do we expect the optimal utilization?
We hope to continue to ramp up utilization steadily as we continue to break through new products and new customers. Because we are a new company in the Azo business, it does take time. It is not like the old Azo business where we are market leaders and, if the business comes back in the last quarter of this financial year, the blue business could probably get back to 90 or even 95% utilization within weeks. It's not the case with this. So but however, here the predictability is now very clear that Q on Q we should continue to improve, and our target would be going closer to about 85% utilization levels. So I would assume that the utilization levels should continue to improve by 5 to 10% every quarter.
Yeah. And in the Azo business, in the capacity, how much is dedicated to yellow and red? Like, are these capacities fungible? Like, if we are not able to crack the red business, can we use it for yellow?
So I'll first give you the basic fact. So we are doing about 70 to 75% of the revenue is coming from the yellow, and about 20 to 25% is coming from the red. Second question, yours, whether it is fungible, yes. The capacities are fungible. Are we using them fungibly? No, we are not. So it could, if we decide and want to convert the entire facility within a couple of weeks or a month, we could convert the entire plant into an all yellow or an all red plant if we like. However, we have no such plans, so we are not using the capacity fungibly, while we very easily could.
Okay, and any update on CapEx on this part?
So the CapEx cycle for the entire group is now, pretty much over. So barring small CapExes here and there, of course, there would be maintenance CapExes that could happen, which are very minimal and, very easily financed out of internal accruals. Apart from that, we may have some CapEx coming up over the next 12 months in ATC, because I think we should be hitting 85% utilization within the next few quarters. As soon as we do that, two things will happen. One, it will turn PAT positive. We have to see how much PAT positive it is depending on the market, but we should be comfortably PAT positive. Once we get to 85% and PAT positive, we would probably need to expand a bit, because we will eventually run out of capacity. So our capacity is 2,400 tons per annum between the yellow and the red combined for the Azo plant, and we need to, over the next 12 months, address it at some point. We would hope to do it by internal accruals, more or less.
Yeah. Sorry, continue. No, continue. Actually, my next question was on the API business. So, given that the realization has been sliding down and the entire industry is under pressure, so have you seen any smaller players going out of business or any signs of consolidation there? And what gives you the confidence that we are near to the bottom of this down cycle? Any thoughts on that?
This is a very good question. So, yes, there is consolidation happening, not only in the API business, but it goes pretty much for the pigment business as well, where consolidation is happening because the market is very poor, and quite a few of the smaller players who are not financially strong or well managed are either closing down or are forced to close down or sell. So it is also true to the API business, where we see that in pregabalin, particularly our main molecule, the business is so unattractive right now that new capacities coming up has completely dried up. This is good news, and that would probably answer your other previous question. Do I see the cycle bottoming out? Yeah, I think the business cycle in the API and the chemical sectors, in generally the chemical sector across India, seems to be bottoming out. Now, the question remains how long we stay at the bottom is another matter, because demand doesn't seem to be popping up. But the bottoming out is evident, because, you really can't go much lower than where the industry is. So that's good news, some consolidation taking place and weaker players going out.
That's good to hear. And lastly, I just wanted to get a perspective on the Azo and API district growth opportunities. So overall, these two bets haven't really worked out well, like we have wanted to now, due to the factors beyond our control and cycle. But given the situation that is now and the unit economics present, so do you feel that we have gone a bit wrong in our capital allocation in this business? Like, how at the board level do you evaluate the performance of these assets? And secondly, as you said, you are generating strong cash flow, as you highlighted. So are we looking for any prepayment of debt, or considering if there's no major capex aligned in the coming year?
Second question first, we continue to deleverage. As I said, the cash flows, despite the business being poor, weak, not poor, but it's not that bad. But despite business being weaker than the previous year, this year, our cash flows continue to be equally strong, and we continue to deleverage. So we are on target for our guidance to deleverage towards March 26, as we had earlier guided. No change in that guidance. And capex needs are less, so more or less should be managed from internal accruals. But if we want to, it should be easily 10 crores here and there, should be easy to manage even while we deleverage. So that's not an issue. On our capex decision, two parts to it. Our capex was executed at great cost. So the time of execution of the capex was actually quite good for the company. So if you look at the replacement cost of our API facility, it is, if I were to put up that plant today, it would probably cost me 35 to 40% more money than what we spent on the H plant. So the timing and execution of the capex was good. Then the API facility, also the capex was generally good, and there also the replacement cost, if you were to put it up today, would be about 10% higher. So land, building, plant, machinery, if you value both the capexes, would cost significantly more today than it did then. The second part of that question where we got it wrong was the timing of getting up and running. So when both the plants came into the capexes kicked in, the plants started, the market conditions and timing was terrible. So we have seen since they started both the plants 3 years, I mean, both the businesses and generally all chemical businesses have gone through a terrible, terrible time. So the timing of starting the plants was bad, but then that's how business is. I mean, you know, it's a long-term game. We are in it for the long term, and we are able to see that consolidation gives us opportunities. So, you know, we have to just wait it out, be patient, and we have the financial muscle to be able to be patient and wait it out.
Understood. Thanks for taking my questions, and have a good day.
Thank you.
Thank you. The next question comes from the line of Arham Gandhi from Molecule Ventures. Please go ahead.
Hello, sir. Am I audible?
Yeah, Arham, you're audible.
Good morning. Thank you for the opportunity. My first question is regarding the API business. If you could please explain the current situation and the realization using the actual realization and the drop in realization. The reason I'm asking is that we have invested significant amount of money in the new facility. However, neither has the sale moved up nor the margin trajectory has changed. So just want to get a perspective as to what is the update on the API capex.
So, as I already said in the opening statement, one of the two main challenges for me as the CEO is to get the API business utilization at the new Chhatral plant going. Here we have not, honestly I have to admit that we have not done very well. The utilizations have, and we have done all the introspection needed, and it is required that we beef up our general business and marketing efforts and team as well. So we would be beefing up our team in terms of HR. So that we are able to get new businesses, geographies, companies, as well as products, and able to utilize a facility which is really top class. So we have a top class asset on hand, and we have not done justice to it and not utilized it. So the utilization levels are low, and the API utilization levels at the new Chhatral facility are about 15%. So I mean, that's terrible. But that does give us an opportunity if we do get it right. Whenever we do, the asset is really top class. So that gives us an opportunity to mend what we haven't done right. And on terms of realizations, I mean, and margins are down also because of realizations. Generally, the prices of, say, the main molecule have come off by 35% over the last 2 years. And, so significant erosion of prices. So this is a challenge. I mean, and we don't see any real up move in prices coming this quarter, but we definitely see a bottoming out. So there isn't any worsening happening.
Okay, sir, well covered. My second question was on the API product pipeline. So you had earlier guided towards the business transitioning from single product dependency to multiple products. So while we are now in a downturn, but what are the steps we have taken in terms of creation of product pipeline so that we can scale things up faster once the demand scenario improves? Also, please, if you could give updates on the work that we are doing to ensure that we are on track with the regulatory filing for the regulated markets, and by when can we see those sales come in?
So, Arjun, can you take these two?
Yeah.
Sorry?
So I'll take them both. So to start with the new products, I think as we guided in the last call, I think in terms of new products and getting them commercial, to follow the right protocol and to do it in a fashion where we can entertain, the reputed companies in India and abroad, it takes quite a bit of time. So I'm happy to say that we have launched one of the products that we had worked on in R&D on the commercial scale as well. We have gone through the process, the stability studies, etc. Similarly, we are working on a few products. So now that we have launched it, I can mention Etoricoxib is the name of the API. So we have launched that and we will now look to start sales for that within the next quarter. This is obviously going to be again a gradual process as now we have completed our processes, the stabilities, and now once we get small orders from customers, they would complete their stability studies and processes and testing, and we would look to gain decent volumes in the next year, but we will start the sales next quarter. So that is a good small positive, but it won't impact the balance sheet substantially yet. Talking about the other question you asked, so I'm happy to inform that we have successfully filed the European filing, the CEP filing to the EDQM. And we have done that a month and a half back already. So we are waiting now for them to review the dossier and come back to us. And we are hopeful that within the next 7 to 8 months, we should have that approval, which will not only open the doors for us to Europe, but the CEP certification that is provided through EDQM opens the doors to several other global countries as well. In pregabalin, while we are a dominant volume within India, we have no real volume of business in any of the reputed and higher regulated countries. So we will look for pregabalin to add this, and this should hopefully, once we get that certification and are able to engage with customers, put us in a good position as we would be strongly positioned because of our backward integration at Chhatral and a good strong volume backup which will allow us to be price competitive and grow that market with better realizations than we currently have. So once again, this will take a little bit of time as we have learned everything does in the pharma space, but we hope we have now officially filed. We've got the response from EDQM acknowledging the filing, giving us the CEP file number as well. So we are hopeful that within the next 7 to 8 months, we should have that approval from them and look to tap these new markets in the next year.
Okay, sir. Thank you. One last question is on the Odhav and Chhatral side. If I remember correctly, you had mentioned about shifting the pre-gabling production to the new site to get better efficiencies. How is the progress on that front? Has that already been shifted? And if yes, what are the updates on the Odhav side now?
Take it.
Yeah. So here again, it is, as you said, that was a plan and a strategy that is a little bit floating, but that continues to somewhat be, what we want to do. So we have shifted some of it. Again, the thing here is regulation. So we have a substantial volume in India, part of which is to highly regulated companies, and some of them, we cannot immediately shift. So we have already gone into the process. We have discussed with several of our customers. Some of them have, seen the new plant shifted already. Some of it continues to be from Odhav. But the shift from Odhav to Chhatral has allowed us to add, for example, Etoricoxib, which is not as high volume as pregabalin, so that has been taken in the Odhav plant. So that kind of room and the room for new products being taken is only allowed because we have the Chhatral plant. We have already partially shifted some of the pregabalin business there. So we will continue to do it in a stepwise and very transparent fashion with all our customers. And we will continue to also devise that strategy as it goes by as to which products are where, what is best, efficiency-wise and regulatory-wise for Atlas. We'll continue to do it in that way.
Okay, sir. Thank you. That was well covered.
Thank you. The next question comes from the line of Vishal Sethia, an individual investor. Please go ahead.
Good afternoon and thanks for the opportunity.
I'm sorry to interrupt you, Mr. Vishal, but your voice is not clear. Can you please speak through handset?
Good afternoon and thanks for the opportunity. My question is on the impact of tariffs. While you mentioned that the blue business should largely be unaffected, but we have witnessed a decline in sale in the US markets. So what has caused this? And also if you could share how the tariffs impacted the other two businesses.
So the blue business has not been spared. I mean, the blue business has been significantly impacted, as I said in the opening remarks and later on as well. And the reason is earlier we were thinking, the two parts to the blue business, the pigment and the crude. The crude is not subject to tariffs. Pigment is. So pigment is directly impacted, but even the crude business is impacted because the customers are very nervous and their customers and the passing on of the prices to their customers, the uncertainty of if they place major orders and get material and then the tariffs are brought down, then they would be hit by the material. So they are all trying to destock and there's a nervousness. So the blue business has been impacted significantly due to the tariffs, and more so because the tariffs are becoming uncertain. I mean, everybody expected that the tariffs won't come. They came, then they expected that it would go away, but they didn't go away, and then China's disappeared. I mean, disappeared in the sense they struck a trade deal with China before they did with India. So this was all pretty unexpected. As far as the impact on the other two segments, not much, because we don't have any U.S. business in either of the two segments. So actually no impact of tariffs on those two segments.
Okay. So my second question from an outlook perspective, given the current scenario, if you were to put out a number on the sales number for each of the business segments for the next year, what would that be?
So it is difficult to, you mean for 26 March or you're meaning the year after that?
Can you put out both those numbers?
So 27 March, very difficult to put out a revenue number, but I'll give you a basic one that we should end the full year at pretty much the same revenue as last year is what our hope is. We still have pinned our hopes on the last quarter of the financial year, where I do see significant recovery compared to the H1. So I would say that revenue-wise, we should be there and thereabouts, 5% around what we were earlier, so not much of a drop. EBITDA would probably come down by about 20%. We had a 60 crore consolidated EBITDA earlier, and similarly, PAT and would come down by about 20% in line with this is the consolidated numbers I'm giving you overall.
Okay. So what are the
EBITDA margins on a consolidated basis? The EBITDA margins, which were at about 11%, would probably end up at full year at 9%.
So, are there any internal targets for each business segment that you are working with?
Of course. Yeah, we definitely have internal targets for each of the segments. But they are so dynamic that, to break them down in detail over a call would be difficult. The one I would give you is about ATC, where we see that the capacity ramp up will continue. And as I said, we are at 57% for this quarter, and we should be, by December end, we should be at 65%, and by March end, we should be at about 70+%, hopefully, if everything goes per plan. And I am pretty confident on this that it should go as per plan. As far as the ATC, the Atlas business is concerned, Arjun, can you talk through the order facility? I think there we are already at very good utilization levels.
Yeah, so I think as we have also mentioned in the past, and I briefly mentioned, we are at good utilization levels at ODA. There is a lot of, again, as our CEO said, it's difficult to give exact things, because especially in Atlas, because it's a very evolving situation even with the product mix and so on. So, it's difficult to comment, but in terms of utilizations, we can say that we believe and are confident that the ODA utilization will continue to stay at very strong levels, and we will look to amp up the utilization at Chatral, and as mentioned earlier, we will look to beef up our team and our efforts to try and get utilization there, which will drive the numbers better at Atlas.
Having said that, our challenge is driving up the utilization levels at Atlas's new Chatral plant. That is a challenge, and we need to do significantly more towards that and build up a team that can deliver on that. We are in the ATC and Asahi. We have a team which is extremely well positioned to deliver. We have to create a team for Atlas as well.
So, just wanted to understand on the sales part, what would be the aspirational target you could see? By when do we see Asahi cross the 1,000 crore in sales mark? And in your opinion, which of the current business has the potential to drive that growth?
So I think we should end the year at about 550 to 570. So it should take probably 3 years to get to 1,000 crores. It would predominantly come from ATC, which has significant room to grow. Even over 3 years, double the business quite easily. And then also from Atlas, where there isn't even a need of a capex. We just need to improve our utilization of the API facility at Chatral, which is working at 15%. So if we improve the utilization, Mitesh, can you throw a number on the optimal utilization what Atlas could possibly deliver? Of course, it is a challenge to get there, but Mitesh will throw light on your question.
So without adding any capex, our optimum turnover would be 750 to 800 crores. And if we put 15 or 20 crore at ATC, then it will give 100 to 150 crores more. So at optimum, after capex, it would be 900 crore.
Okay. So ATC is the business segment that you would be willing to invest more capital in?
We will have to. It's not going to be significant capital. It'll come mostly from internal accrual, but yeah, because it's starting to do well now. So it will require, not now, probably in 6 months' time that we start addressing capacity there.
Okay. So that's it from my side. Thank you.
Thank you. Thank you, Vishal.
Thank you. The next question comes from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning, everyone. So, Gokul, my first question is, when we were looking at the API and pregabalin part, and we did the CMH, RCMH part, in our earlier conversation, we were talking that because we will be one of the very few backward integrated players and hence will be very cost competitive. So I understand the challenges on the realization side, but on the sales side, despite being very cost competitive, we're not able to ramp up the sales and utilization is pretty low. So what has led to this part despite being backward integrated?
So, Donald, basically sales is actually not doing too badly. If you look at our pregabalin sales, that sales has done, better than we used to do before. The problem is we have put up a new capacity in Chhatral, and that capacity is not utilized. So, our challenge is to probably end up, finding new customers and new products. So it's a business challenge. And to be able to then utilize an asset which is of top quality so that we can, it's not possible to double the volumes of pregabalin per se. But otherwise, on the absolute numbers of the API sales, we are not doing too badly. I mean, we are doing, Nitesh, can you throw a little light on our sales numbers on the API?
Currently, we are in around 32 ton APIs per month.
Okay. No, so I think my understanding
is more than what we used to do earlier, but our capacity is now close to 60 tons overall at Atlas as a group level, maybe even 65, depending on the molecules. Arjun, am I right?
Yeah, the capacity is, depending on molecule. And to answer, to put a little numeric, we have almost 1.5 times the sales of the API. So the volume has grown substantially, compared to before. So it's not that we are struggling with that volume. As mentioned, the capacity has grown much larger than the growth in volume, which is why we are seeing this. But standalone, the volume of pregabalin, we have grown over the last 2 years pretty well. It is the price pressure and realizations that have come down, and that is why we are hopeful that the CEP and entering the better, more regulated markets will help us add that volume and also help with realizations a little bit.
And we have been able to sustain this downtrend in the prices, 35% knockoff on the prices of the APIs due to the backward integration in pregabalin. So that's worked all right. I mean, there are people who just stopped their business and have gone out in the consolidation phase. So,
got it. So again, a question then on is that how do we move from 15% utilization to more respectable numbers? Is it that we'll have to wait till we enter regulated market on the pregabalin side, or the new products, again, they are probably low volume, high value products, so utilization may increase incrementally but not substantially. So how should we look at this 15% moving to a much better number? What are the things that we need to do?
Three ways to look at it. One, with regulated markets coming in, it should help us, of course. The problem is that's going to take time. The second is the molecules that Arjun talked about. We have one which is commercialized and 4 under commercialization. However, those are not going to be significant. So then it comes to, basically finding a way in which we get a couple of people into the organization who can drive the business in terms of getting new molecules which bring volume to fill up the capacities, or, some other strategic way of doing some contract manufacturing for larger companies. So those are strategic things that I won't have an answer for right now. But the third way is to beef up business side of Atlas.
Okay. So is it fair to assume that at least for this year, the capacity utilization will remain at similar levels, maybe incremental 3, 4, 5%, but nothing substantial?
Yes.
Okay. So second question is on Azo. I think you sound very confident on ramp up on Azo side. If you can talk about, we've been trying to, get some large customers, product approvals and commercial supply, both in US and Europe. So any progress on that? That is what is giving you this confidence, or, are you kind of banking more on the domestic market growing?
So we are getting the confidence. We are doing whatever we are doing right now is without the export business. So that is not what is giving us the confidence. We are just having our team is starting to deliver better. Our products are doing better. In the local market, we have made significant inroads. And when nobody else in the pigment space in India is growing, we continue to grow every quarter, though marginally, but in the right direction. Arjun can talk a little more about what we can do in exports. And once we kick in the exports, and this may take another year or so, but then the opportunity would be significant once we do that.
Yeah, so just to give a quick light on the exports, I think, we continue to work with several of our, partners about the Azos. Once again here, one of the large markets was the US, and with any new demand and any new kind of introduction of a product, because of the tariffs, we have obviously faced a setback in terms of timeline and interest. But this is again a short-term thing. We continue to work, and they are as well long-term thinkers. So we continue to work, and we hope that export business would start at ETC. However, we are not using that to hide and just say that this. So we are working hard on the local business, and we are confident, as mentioned, that we will continue to keep incrementally pushing ahead and pushing forward. And whenever we get that export jump as well, that would be welcome. But we will continue to work hard and make sure that we move ATC in the right direction, and we are confident of doing that.
So our exports have moved from 10% to 19% if you compare from between the two hubs. This is of course not good yet. We need to continue to move that upwards towards my stated goal of 50-50. And there, as Arjun rightly said, US will, if you get to 50-50, US will play a significant role, which is completely stalled. So once the tariffs sort itself out, we will, at a group level, do significant efforts within the United States by appointing somebody there or doing some work directly there, whereby we can target small direct users in the US as well.
Okay. But this entire idea of going to from, let's say, 57% to 85% in, let's say, next 4 to 6 quarters, that is not dependent or subject to export large customer kind of kicking in. Is that right way to look?
That's the right way to look at it.
Okay. And last question, sir. I think we mentioned in the commentary that from Q4 we may see some sales uptick on the blue business. So is this kind of again contingent on the tariffs getting resolved, or are we getting some input from customers where they are actually talking about increasing the offtake from the Q4?
This would be dependent on tariffs, unfortunately. So, but we hope that by then it should be sorted. And once they are, then it should come back quick.
Okay. Got it. Very clear. Thank you and all the best.
Thank you.
Thank you. The next question comes from the line of Rudraksh Raheja from iThought PMS. Please go ahead.
Hi. Good morning. Am I audible, sir?
Yes, you're audible.
Yeah, thank you. So many of my questions have already been answered. Just a couple of questions more. Sir, what is our exposure to US within our blues business in general? Like, how much do we sell to US?
About 7 to 10%, 7 to 9%. It depends quarter to quarter, but it varies on a low of 6% to a high of 10%.
Got it. But sir, decline in the standalone sales or what you call as your blue business is much more than 7 or 9%. So what led to this
fair enough.
degrowth?
So see, what has happened is, first of all, the 10% US business has taken a direct full hit. So it's not declined, it's evaporated for now. And that should hopefully come back as it is evaporated straight away whenever it does. But other than that, also the business environment in the rest of the world remains even more sluggish than the US. For example, where our main markets are in Europe and in Japan and Korea, these markets also have seen slowdowns. And they have also seen their own uncertainties due to their own issues with Trump tariffs. So due to that, the general global trends have also been weak. Then if you look at even whatever business we have in India, which is also very strong and it has grown over the last 5 years in India, that business also, my customers also would be impacted due to the US tariffs. So all of that uncertainty as well as the direct impact of the strongest country, the biggest consumer in the world, having this kind of tariffs which are unsustainable at 50%, has had impact overall as well. So you take the 10% out and then another 10% from the rest of the business. That brings you to a good 20% downtick, which we have seen.
Understood, sir. Sir, what would be the CPC crude price on a per kg or per ton basis for this quarter?
So the prices in the pigments business have remained stable, and this is because it's bottomed out. So there isn't a concern in terms of pricing on either of the blues, reds, or the yellows. They remain stable. It's not up significantly, but it's not going to go down anymore. So the volume drops have not been in account of, the revenue drop has not in the blue has not been on account of pricing, it's been on account of volume drop.
Understood, sir. And sir, when we say that the peak potential of this division is 400 or 450 crores, is that calculated on the bottomed out prices? Would that be a fair understanding?
Yeah, if we do 95 or 100%, then it would be on the bottomed out prices.
Yeah, so let's say if prices rise in, let's say, next 6 to 8 quarters, this number could be even higher than this.
Then it could be on the upper side of the range, 450, or it could push, with prices higher, it could definitely push beyond 450 as well.
Understood, sir. And sir, coming to the Azo business, how much sales did we do in H1 FY26?
It grew. Pratik, do you have an exact number? I don't have an absolute exact number.
Somewhere around the range of 40 crores. Would that be a fair assumption?
Pratik bhai?
Yes, that is the right ballpark figure.
Understood. And that would be at around 50% capacity utilization for this plant.
55.
55 to 57.
Got it, sir. So what kind of EBITDA can we expect from this segment once we reach this 85% level?
Our stated target has always been, about, the good industry standard of 13 to 15, depending on market conditions.
Understood, sir. Okay, sir. Coming to the API segment, correct me if my understanding is wrong. The approvals that we have applied for, that you've been talking for in the last 2 months that we have applied, is that drug specific or that is the plant approval that we have applied for?
That is specific for pregabalin.
Pregabalin, okay. So whenever that kicks in, we are eligible to sell our products in that market. There would be no delay after that.
Yeah, so we are eligible. As soon as that kicks in, we are eligible to sell in that market. Obviously, that does not mean that it will move to commercial orders with customers immediately. But yeah, eligibility is immediate, and then you would work with customers to get it approved in their dossier, and which process is only allowed once we get this EDQM certification. So, again, it is not a very like a momentary addition. It is something that goes into obviously the human body, and hence there is a lot of regulation to it, but this will be what will allow us to approach and get into those markets. And the big advantage of this CEP filing is that it not only opens the door to Europe, which is the body that gives us the certification, but there are several other countries like Australia, parts of Africa, parts of the Middle East, which all accept this filing, because there is a certain amount of respect for CEP and EDQM. So if you are able to get that, a lot of countries are also okay to take your product based on that. So that is the additional benefit, and hence we will be, for Pregabalin itself, moving very aggressively in these markets as soon as we get the certification, not only limited to one specific country or even continent.
Understood, sir. And sir, how many drugs are currently in our pipeline that we are actively working on?
So again, this is a slightly difficult question to answer because at different stages, but as mentioned by CEO, so as I said, we launched one, and there are 4 which we are working on a, very, since a while, and on a level where we will look within the next few quarters also to try and launch at least 2 of them. Apart from that, we have worked to slightly try to beef up our efforts in R&D, work on a few products which may not immediately give us a benefit, but slightly, long-term thinking with a few of products which will hopefully, as we work them out at this moment of time, will give us and help us reap benefit 3-4 years later, but that would be obviously a better and more substantial thing at that point. So we are working on slightly longer-term projects for 2 molecules, and we have 3 or 4 which we will look to launch within the next year or so. So it's a varied effort, and also then we are working on some products which are higher volume and not very high technology or new products. We are working on them with backward integration where we make the intermediates as well. So we may look to sell the intermediates in the market. So we are exploring all opportunities, and we, as our CEO said, we have not done enough justice to utilization of the new plant. So we will now work much harder on that, and hopefully be able to get molecules, business, everything, so that we can start to slowly ramp up capacity in the coming quarters.
Understood. And sir, when you say that these 4 molecules that you are looking to launch in the next upcoming quarters, is that on the high volume side or high value side kind of a drug?
So it is a mix. So 2 of them are decent volumes, and 2 of them are volumes are small, but they would be better margin products.
Having said that, the impact of that on the overall business revenues and the profile is not going to be significant in any way for the next 1 year.
Okay. Understood, sir. Understood. And sir, the hiring and marketing and the other things that we are going to focus on, have we already started that, or I just wanted to understand when should we expect that kind of a thing hitting our P&L?
So we've already started the process, and it will probably take 3 to 6 months to run through the process, and then to get somebody and then to have impact. So I would say P&L impact in about a year's time.
Understood, sir. And just circling back, I missed one question on Azo side. Are we still facing any product development consistency or any kind of issues that is hampering our export?
this business is going to be an ongoing thing, but Arjun will take it.
Yeah, I was just going to say something on this. So, pigments, while a lot of them have been thought of as commodity and have, in terms of the supply demand, the supply probably being higher than demand has led it to work monetarily as slightly commoditized products, but they are very, very specialized products actually, and pigments are very tricky to make, and this is the reason why we have seen certain trends happen over several years, like, even the Thalo versus Azo, India versus China, different technologies and different dominance over the countries is because of because of the way the pigments are made. It is a very specialized process, so it will continue to be, it is not going to be solved overnight, and it is not even for the largest pigment companies in the world. What we can say though is that we have got at ATC, we have now a stronger team. We have more dedicated product development as well as operational consistency, responsible people who are experienced in the field, and they are already starting to add value. We will continue to push towards more and more consistency and better and faster new products. It will not stop and will not be immediate, but we can say with certainty that the consistency has started improving, will continue to improve, and product development will be better and more systematic than it has been in the past. But it will not become perfectly consistent, and no pigment company can be like that.
Sure, sir. Understood. Sir, just one small clarification on this. I think this is the first time we have been very confident that we'll get to this 85% mark, and that too on the account of we are getting a very healthy response from the domestic market. So just to get better clarity on this, what is it like? Have we already cracked a lot of product and it would be easy to add more customers, or is it the other way around? That we have added the customers and now we can sell more products to them.
This is actually it is a catch-22. It is both those things. We realized and we have changed the way we look at the business in the past year. It is something that has helped us and helped the whole group in thinking of it, I think, the right way, as opposed to Thalo here. As you said, we have a lot more number of products. So we may be 1/5 the volume, but we have 10 times the amount of products already. And in terms of customers, the same thing. There we would have the top 4 customers in the world who take 80%. Here we would have 70 different customers. So it's a very different kind of a business. The way it is done is different, and why we are confident is a bunch of reasons all coming to place. One is obviously a larger product profile, which always helps a larger product basket. Second is having a reputed name and thing in the local market. We are starting to slowly build a reputation in as well as ATC being a good, strong player. And as mentioned by our CEO, we may still be small and we are making incremental advances, but we are the only Azo maker that is growing in size, albeit slowly. So, we have that is the perception starting to build in the local Indian Azo customers market as well. And that is the reason that we are confident that we will continue to use the better consistency, better work at the plant, coupled with larger number of products, a good strong set of varied customers. And then obviously it goes without saying that, as our CEO mentioned, 10 to 19% growth we have done. We are not satisfied, and we will continue to push that number as high as we can. And we are working on it. There are certain things that are not in our control, but there are a lot of things that are in our control. So we will continue to push in that direction and make sure that we are prepared in terms of products, in terms of consistency when the opportunities come in terms of higher demand or lower tariffs. So we will put ourselves in a good position. And to answer your question, while we are confident, I think you little earlier asked that, domestic business gives us the confidence. 100% it does. But at the same time, our confidence is also relying on the fact that we are confident of eventually continuing to grow our exports as well. So, it may be a little slower than expected, but we will continue to push that direction. That will further help us grow and helps boost our confidence as well.
Understood, sir. So some time back, Government of India announced an ADD on few of the ISO products. Is that also a contributing factor in our increased confidence for our domestic business?
No, because that hasn't materialized yet.
Yet, but as and when, if it comes, would that help our business as well?
Of course, certainly, it would help the Indian ISO industry itself. But zero impact yet because it hasn't happened, and we aren't factoring it till it happens.
Fair enough. Fair. Understood, sir. Thank you so much for answering my question.
Thank you. The next question comes from the line of Ashok Gupta from AG Investments. Please go ahead.
Can you hear me?
Yes, Ashok bhai. Go ahead.
Okay. Good. So my first question is about the Chatral utilization. Now that we have applied for the certification a month or so back, and it is expected to take minimum 7 to 8 months, and thereafter, getting the approval from the customers, which would again take, 3 to 6 months or so. So that means even considering that we may not be able to supply to the regulated market in the next financial year also, so you have outlined 2-3 more other ways of increasing the capacity utilization. Keeping that in mind, what can be the capacity utilization of Chatral plant by end of next financial year?
So this is a difficult one. As I said, this is one of the main challenges that we have, and till we find an internal answer to it, it will be difficult to put a number on it. Our effort would obviously be to continue to utilize the capacity more. As soon as we do that, we should do better. But very difficult to put a timeline on when, because there is a business development factor attached to it. And on the other side, the compliance side and the product development side, it takes a very long time to kick in. So very difficult to put a exact number on this, unfortunately.
Okay, so at Chatral, the 60 ton per month capacity is only the pre-gasoline, right?
No, I mean, when I said 60, it is general capacity. That's a layman kind of language. It's not. The capacity here is talked about in, Arjun or Mitesh, you can take this in terms of capacity. 60 tons as in not pre-gasoline. We could do 60 tons of pre-gasoline. We could do 60 tons of a mix of different molecules. The total, or even more, depending on the molecules, even possibly 65 tons. That is a combined capacity between the two plants.
65 tons, including Oda also?
Yes, both the plants.
Both the plants. Okay, fair enough. And Oda, you said that it is, the utilization is at a good number. So, as per your standard, good number is what?
95%. 90%.
Okay. So this Chatral, as and when we reach good utilization, do we have space to increase the capacity in future?
Yes, we have significant space there. Land is, it's a nice plot, and there is significant room for, so there are two parts to it. We can increase capacity within the building block we already invested in. So the second phase of CAPEX would be much more return on investment. Investment to turnover ratio there would be much better than the first phase. And then we could have the third phase where we could replicate the whole capacity identically, a twin capacity right next to it.
Okay. So since you are not able to give a timing of the higher utilization of Chhatra, so my question is, irrespective of its utilization, if our azure dice picks up and so is the blue color, would it be possible for the company to reach 11 to 12% of EBITDA margin, as and when it happens, if both blue and azure starts doing well?
Yes.
That is possible. Okay. So last question on the azure dice. You said you would kickstart as and when it reaches more than 80% capacity utilization. So my understanding is, I think 2,400 is the capacity there. You would be adding additional 2,400 there?
I would not comment on it right now. We will eventually add 2,400 additional. This we know, but that won't be in the next phase. In the next phase, we may up it by gradually. Because as I said earlier, we will not be embarking upon a major capex. Most of it will be small capexes where incremental capacity is added, and we have some room to add some capacity within the existing building block itself. So this would not be doubling the capacity, or it will be smaller expansions in capacity as we need them, with very, very small capex requirements.
Okay. So, but there also you have sufficient space to go up to maybe, 3 times or 4 times more than the current capacity, right?
Yes, we do. Yes. Significant space.
Okay, sir. Thank you very much and wish you all the best.
Thank you very much.
Thank you. The next question comes from the line of Prashant Kumar Uttamlal, an investor. Please go ahead.
Hello.
Yeah.
Hello.
I can hear you.
Yeah, good afternoon. Good afternoon, sir.
Good afternoon.
So my question is blue pigment. We were already at 95% last year, right? And we used to do 13 to 14% kind of operating margin before 3 years or 4 years kind of. Right? So, and we were at 9% or 10% last year. So how do we see this segment operating margin will go ahead?
Arjun?
Yeah, you're right. We were seeing higher margins earlier. We are confident of, increasing our margins to slightly higher numbers, realistically to around 12-13%. We feel that the industry and the supply-demand situation is such that it, would not allow for margins at, some of our previous levels, but we are confident of raising it by a few percentage points next year itself, and hoping to then make that a standard thing for coming few years.
And what was the reason for this to go down? Because blue segment we are market leader, and we have seen good environment, like economic environment than what we have seen in 16-17, right? So still we are below our 16-17 years, like 2016-17 years marking, right? So what could be the reason, right? Why we were at 9% or 8%? Once in a while we were at 6% kind of thing. Right? So what was the reason?
So
and we used to say that we are leader.
So we still say we are the leaders. So there is no change in that. Our margins are still leader margins. I mean, nobody in the industry is at 10% margins right now, EBITDA. So we continue to remain leaders. The 16-17 you are referring to was an aberration year with lower volumes and very high margins. And then we have had consistently good margins. Just now the business environment is not good. It is actually last 3 years it has been a very, very poor business environment. It has definitely bottomed out, and we should see an improvement at some point. But as of now, last 3 years we have seen a very, very, very poor demand and business environment, where consolidation happens. A lot of smaller players in the blue segment have been pushed out of business also, which augurs well for the longer term health of the business.
So do you see like overall capacity in India has gone down from what it was 3 years before? before years?
There was overcapacity anyways, and from this overcapacity, quite a bit of that overcapacity has gone out, yes.
Right. So now we are already working with 95% kind of like capacity utilization in blue segment.
Not right now. Right now we have dropped down to 70%.
Right. Yeah, I know. This is an aberration kind of thing, right? So, but we are working with 90 to 95% kind of capacity utilization. So, are we seeing any capex in this segment?
No, not planning anything.
Why so?
Because we would not want to, deteriorate the quality of the business that we have. There is already overcapacity in the industry, and that's why a lot of the small companies are going out of business. In that kind of an environment, if you add capacity, it would be detrimental to my existing business and would create unhealthy competition. Basically, I'll be deteriorating the quality of my own earnings stream.
Right. So we are not going to see much kind of like revenue increment from this capacity. We are looking for operating margin improvement from this capacity.
Correct. So no major revenue increase guidance. It would come through either improved prices or improved utilization, and absolutely no capexes in the blue segment at all.
Right. So my next question is on Azo. Right, so how much capex we have done for Azo's capacity?
I partly understand. I mean, you mean when? Now we are already done with the capexes. There is no capex happening.
How much total we have spent for this capacity?
Mitesh?
So for what?
The total capex spent on the plant at Dahej would be about 85 crores.
85 crores, yes.
Including 85
some basic infrastructure. Right. So on 85 crores, what kind of ROE we can expect? Right? Because you say that after 60% kind of utilization, we will be per PAT, and then and we are expecting up to 85% of capacity utilization with 12 to 13% kind of operating margin, right? And so with 85%
not operating,
kind of
EBITDA margins, not operating. Operating would be close upwards of 30%.
Okay, EBITDA margin, right? So it will be with 85% kind of capacity utilization, we can be around 100 or 110 crore kind of revenue.
110, 120 crores also is possible, yeah.
Right. So with 12 to 13%, it will come around 15 crore kind of thing, and then we have depreciation and interest and everything else is going from that. Right. So what kind of we are working for 6 to 7% kind of ROE?
ROCE we are expecting should be about 11-12%. What happens is when we expand further, as we expand the capacity, the investment to turnover there is going to be significantly better. We are having right now on our 85 crore investment a possibility of 1.3 up to 1.4 times turnover. In the next phase, the capex that we do will have probably a 1 to 3 investment to turnover ratio. And hence the ROCE in phase 2 over the next 2 to 3 years will continue to improve there.
So we can see a good profitability after next expansion only, right? So for
in terms of if you are talking about major improvement in ROCE and ROE, that would come as we expand, definitely.
Right.
I mean, there would be unlock of ROCE and ROE as we improve our current business also, but that would not be magical. I mean, I wouldn't double my ROCE straight away. That would happen quickly when we expand.
Right. So at least in this segment, how is the pricing? Like it has bottomed out, or it is like as usual, it has not gone through the pain, or like how do you see this?
It has already gone through substantial pain. Last 3 years, the pain has been significant. We have also bled, and as many others in the industry. So it looks like it's bottomed out. Having said that, it's not like, it's already starting to go up. There is enough uncertainties and benign demand that it's not going up, but there is no room for going down. So that is comforting. I mean, the prices are bottomed out.
Right. And it's the same question from API, right? So like how much capex you have done for our new facility, Chhatral?
About 75 crores.
70
to 75, yeah.
Okay. And we have bought this Atlas. Atlas capacity is from there only, right? The Odal capacity is from only. We have not done anything in this Odal capacity.
Right? No,
right? So how much we have spent for that? Like,
so we acquired it at 56 crores.
56 plus 75, so it's almost 121 crore kind of thing.
Yeah, about that.
Right, and the same thing, like how much ROE we are expecting from this.
So there, if we get
because it is, I think it is also going to take 3 years from here, right? So so all our
the turnover from the turnover from this should be upwards of 250 crores over the years, and maybe even 300 crores depending on the product mix. So the ROE and ROC there would be healthy. It would be probably 15% or 17% at 250 crores revenue.
So like all this product from this our API, right? So they are considered as a commodity kind of thing, or it's like anything we have some specialized product from there from.
Sure. The pigments, as Arjun said, pigments are absolutely specialty products, extremely difficult to replicate and make. So it is an entry barrier. And there is no substitute for these pigments. So they are classic in nature. Even in 10 years, I would be, the ink, paint, plastic industry would be using the same pigments because there is no competition in terms of product substitution. With the APIs, there is always a challenge of product substitution, though pregabalin per se is a product that doesn't have anything in terms of product substitution for the next 5 years. But you know very well with the API, the obsolency in terms of product life cycles are there. So you have to keep on, you have a capacity which is multi-product, and you can get new product and molecules rammed up into those capacity.
All right. So what I have noticed from this whole phone call is like we are working in the right path, but it will take at least 2 to 3 years to get to 2 to 3 years to get to some point of some good point of revenue and this operating margin, right? That is true?
Yeah, from the ROCE point of view, it's true. I mean, it will take 2 years to get to good ROCE numbers.
So that is at least 2 years.
Over the 2 years, over the 2 years, within the 2 years, even next year, the ROCE should be much better than what we have now. So the improvement in ROCE is not going to happen at the end of 2 years. It is a continuous process. We should be pushing to improve our ROCE through the 2 years as well. But the significant improvement would come once the API ROCE kicks in, and that could take another year or so to start kicking in, then 2 years to show up.
So what is there any internal target for ROCE, like after 2 years, how we can see 18%, 20% kind of ROCE, or like?
Yeah, so upwards of 15%. Upwards of 15% ROCE. Definite internal target is there.
So last year we already had 12%, right? So
yeah.
All right. Okay, no problem. Thank you very much, and all the best.
Thank you very much.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to Mr. Gokul Jaikrishna for the closing comments.
Thank you everyone for attending the conference call today. It was a pleasure interacting with you. Some very interesting and very good questions today. And on behalf of our entire team, it was a pleasure interacting with you. Thank you, and have a great day.
On behalf of Asahi Songwon Colors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.